A well-defined investment strategy is like a guideline that states where the fund invests. Let's check out strategy adopted by Tata Multi-Asset Opportunities Fund, an open-ended scheme investing in equity, debt and exchange-traded commodity derivatives that has made the first move towards commodities investing through exchange-traded commodity derivatives in India. So, unlike other multi-asset funds, it invests in a mix of equity and fixed income along with unheeded asset class, commodities with an aim to make the most of benefits offered by them. Wondering how commodity derivatives can help to enhance returns across market cycles? It does so by exploiting arbitrage opportunities and locking profit between two contracts, taking directional calls to benefit from price increase, and widening or narrowing of calendar spreads. Let's take a look at strategies adopted by other asset classes. With equities, the fund aims to create a diversified equity portfolio across earnings to optimize risk-return trade-off. And with debt, it seeks to primarily build an accrual-based high-quality portfolio that intends to maintain low credit risk and maturity profile while taking opportunistic stands to interest rate movements. As equities generally work in economic upcycle and debt in downcycle, combining it with commodities can help you create an ideal portfolio that may work well in all market seasons. Moreover, negative correlation between asset classes can help to reduce the overall portfolio risk. So go ahead and make the most of commodity ETCDs investing with Tata Multi-Asset Opportunities Fund. Never miss one. NFO closes on 28th February 2020. For more details, call on 022 6282 7777, SMS TMF to 57575. Contact your financial advisor or visit www.tatamutualfund.com. Investors understand that their principal will be at moderately high risk. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.